Hey there, Kansas City. It's February and we are in the middle of tax season. Welcome back to the Kansas City Real Estate Podcast. I'm your host, Joe Stephenson, and whether you're out showing houses, closing deals, or just looking for ways to sharpen your skills as an agent, I'm so glad you're tuning in. Now, I know tax season isn't exactly the highlight of anyone's year, but it's something we all have to deal with, especially as real estate professionals. Today, I want to walk you through some useful tax tips, including common write-offs, why you need a good profit and loss statement, and a few simple systems to stay organized. Sound good? All right, then let's get right into it. Oh, and before I really dig in, I have to pop in a quick disclaimer. I'm not a CPA or a tax professional. Shocking, I know. What I'll share today is just general informational stuff. Definitely check everything I mention here with your CPA or tax preparer before filing anything. Okay, now we can get started. Common tax write-offs for real estate agents. One of the biggest advantages of being a real estate agent is that you're considered self-employed, which opens the door to a ton of deductions. The challenge, of course, is knowing what you can write off. So here's a rundown of some of the most common tax write-offs you need to know about as a real estate pro. First off, vehicle expenses. If you're like me and practically live in your car, you need to be tracking your mileage. Any driving you do for business purposes, whether it's heading to a showing, meeting a client, or attending a closing, can count. You can either deduct your mileage or your actual vehicle expenses like gas, maintenance, and insurance. Your CPA can help you figure out which option is best for you. Next, marketing expenses. All those dollars spent on postcards, Facebook ads, that slick drone video you had made for a listing. All of that can usually be written off if it's helping you promote your business. Make sure you add it to your list come tax time. Then there are your office expenses. Whether you're renting office space or working out of your home, you might qualify for a home office deduction, along with all the office supplies you buy. Pens, paper, a new printer, you name it. Even your desk chair could count. And don't forget about professional fees and training costs. This includes things like MLS membership fees, continuing education classes, or hiring a professional photographer for your listings. You can also write off tools like your CRM software or subscription services you use in your business. And finally, cell phone and internet costs. If you're using your phone and Wi-Fi for work, and we all do, then some of that expense can be deducted as well. Again, this is one where you'll want to work with your tax pro to figure out the best way to break it down. And that's just a quick list to get you started. There are plenty more deductions out there depending on how you run your business. So be sure to track everything. Speaking of that, why you need to track expenses and save receipts. I cannot stress this enough. Track everything. Every receipt, every invoice, every app subscription you pay for, keep it all. I know it sounds tedious, but hear me out. If you're staying on top of your expenses throughout the year, you'll thank yourself 100 times over come tax season. Trust me on this one. Now, the good news is it doesn't have to be complicated. There are a ton of apps out there, QuickBooks, Expensify, even just using the Notes app on your phone to track expenses and store receipts digitally. A great tip is to create a habit of snapping a picture of your receipt the moment you get it. Don't tell yourself you'll do it later. You and I both know you won't. Staying organized helps reduce your risk of leaving money on the table with missed deductions. Plus, you're protecting yourself in case the IRS decides to take a closer look one day. Nobody likes audits, right? What is a profit and loss statement? Okay, now I want to talk about something you've probably heard about, but maybe haven't thought a lot about. Your profit and loss statement. I know it sounds super boring, but bear with me because it's actually a really important tool for any business, including yours. A profit and loss statement, or P&L for short, is just a simple summary of your income and expenses over a set period of time, like a month, a quarter, or a full year. It's what helps you see how much money you're making versus how much you're spending. Think of it as a snapshot of your business health. Here's an example. If you're bringing in $10,000 a month in commission checks, but your expenses, marketing, office supplies, gas, add up to $6,000, then your profit is $4,000. Understanding these numbers is critical. Not only does it help you budget and plan for the year, but it also makes tax prep much easier because you've already categorized your expenses. And hey, if you're applying for a loan to grow your business or even just trying to save up for a big purchase, Having a clean P&L can make the process so much smoother. If creating a P&L yourself feels overwhelming, don't sweat it. Work with an accountant or use accounting software that can generate those reports for you. Either way, having that document will make your life as a real estate agent so much easier. All right, so that's your crash course into surviving tax season as a real estate agent. Remember, keep track of your expenses, save those receipts, and know the power of your profit and loss statement. And don't forget to work with a qualified tax professional to make sure you're doing things right. Thanks for spending time with me today. If you found this episode helpful, make sure to subscribe to the Kansas City Real Estate Podcast so you never miss an episode. And hey, if you've got a friend or colleague who might need a little help with their taxes this season, share this episode with them too. Until next time, happy house hunting, Kansas City. Stay safe, stay smart, and I'll catch you in the next episode.